Hi, this is Justin Smith, Smith Partners Wealth Management, and I'm sending out this video in hopes of getting up with you guys to let you know what we see going on in the market, hopefully providing some perspective on that and some opportunities that we see, and then a couple of housekeeping items. So I'll try to keep it short, but the long and short is that we do want to hear from you. We want to be here for you, and we look forward to talking in the coming days. So today the market was down about 13% and marks the largest single day downturn since 1987. And we know that this is a scary time for our health, scary time for the economy and for the markets. And while we couldn't have predicted that the market would drop from a spread of a virus and from a oil price war, and that we couldn't predict how interest rates would drop so drastically, we couldn't predict the individual events here. It does not surprise us that we would have a market downturn. It doesn't surprise us that we could be in a recession already. And I say that because we put in a market commentary recently that we are not going to predict these downturns. We looked at how long it's been and how little volatility we had had. But we said we weren't going to predict these downturns, but we were going to prepare for them and expect them. And so while this has been an extremely short time that the market has dropped through, just the fact that it has dropped is not going to surprise us, and it's not going to derail plans. Just the fact that we will likely have a recession is not going to derail plans in and of itself. I think it is helpful to think through what the market typically does after it drops to this magnitude. Typically in 1, 3, 5, 10 years, the market is up greater than average coming out of this, on an annualized basis. And so that is what we're looking forward through and seeing through. But we also need to plan for what does your life have for you. And so we want to talk through those two pieces of it. One thing I think is helpful to remember is actually a story from 1987. So Warren Buffett, in his 1987 letter to Berkshire Hathaway investors, was talking through the volatile year that they had had. And he recounts the allegory of Mr. Market, which was a story that Warren Buffett's teacher, Ben Graham, had relayed to Warren Buffett. And it goes something like this. Mr. Market is a co-owner with me in a business. And every day we meet out here in the lobby, and he offers me a price. And that is the price that I could buy his half, or that he would be willing to buy my half. It's the buy-sell price. And every day we meet out there, and some days I take him up on it, and some days I don't. But inevitably he will be out there. Now, after we've had a great quarter, we've sold a lot of widgets, we are taking over market share, everybody wants widgets. Mr. Market starts getting proud of his ownership in our business, and he says, Justin, I'm not going to sell you my share for anything less than way up here. And if you want to buy mine, you got to pay a whole lot. And maybe I take him up on that. Maybe I get caught up in the frenzy, and maybe I buy that portion. But we also have some rough days where maybe we lose a customer, or maybe a widget, our supply chain is messed up, or maybe we have a recession, and things look bleak for our business. Well, often Mr. Market doesn't see things as rationally. He's out here in the fetal position saying, please just take my shares, just let me sell you my half. And so his price is way down here. What Warren Buffett says is that Mr. Market has incurable emotional problems, that often he is not operating. Our business will change over time. The market will change over time, but often Mr. Market operates out here on the ends of the spectrum, in this euphoria and in this gloom, and that's what he's pricing his assets at. Now in the long term, typically he gets it right. But in the short term, he really likes to operate on these outside spectrums. And what Warren Buffett and Ben Graham would say is that Mr. Market is a great tool to use. If I need to transact part of my business, if I need to sell part of my business to buy a house, to retire, he is there every day for me to offer my share to. And if he's giving me a good price, I am thankful for him to be there. But he is not a guide to tell me what my asset is worth. If he is out here laying down in the lobby in the fetal position, I don't have to, unless my life dictates it, unless I need that money today to spend something, I don't have to sell my shares to him. I can wait until he's in his right mind. Most days he's in his right mind, but a lot of times he likes to operate on the ends of the spectrum. Now the hard part with Mr. Market is that on Thursday he was out here in the lobby crying and having a hard time. And then on Friday, he raised his price 10%. The market went up 10%. And then today, he's back out there and he's in the streets and he's running around saying, this is the price. And the hard thing is that, for a lot of times, he is basing his price that he wants to sell his shares for. He's basing that on some real things in the news. He's not making things up. The concerns about the economy, about the U.S. economy, about the global economy, those are real things. But we also think that he is likely pricing in some extremes there and betting with his emotions rather than betting with some fundamentals. Ben Graham and Warren Buffett, out of this analogy say, they're saying is that in the short term, the market is a voting machine. It tells you what it thinks. But in the long term, it's a weighing machine. It tells you what something is actually worth. And we don't want to make some long-term decisions, some decisions that will have a long-term impact on a short-term selling opportunity here. Speaking of opportunities, I do think that this downturn gives us some opportunities to think through, and all these are on a case-by-case basis to consider and think through. One is rebalancing as stocks go down and bond prices stay even or go up. That balance in a portfolio can get out of whack, and we need to consider rebalancing. We're doing that for you guys, but are also available to talk through what does that look like. Sometimes in this time it is worth rebalancing past where even might be to take advantage of some lower prices. So we'd love to talk through some of that if you would like to. We're also considering putting some cash to work, either cash in money market funds that were within an investment account or some that are outside in a savings account or otherwise. Worth noting there, though, is that we really think folks need to have a solid emergency fund and have that outside of an investment account. And we can talk through what does that look like, and I think the coronavirus could very well impact that and should have some bearing on that. So let's say your job or your business is heavily tied in with cyclical economies and could come and go and is very elastic. Folks could that could very well determine we need to have more of an emergency fund, and so we don't want to put an emergency fund in danger to invest some dollars. But if we have some dollars saved up and then we have some in excess of that, this could be a very opportune time to invest. But again, we don't know what Mr. Market's going to give us tomorrow and next week and next month and next year. Along those same lines, it could be an opportunity to consider refinancing a house or refinancing other debt as interest rates have come down. This could give us a chance to have some margin to reduce down a monthly payment, and that could give some breathing room, especially for folks whose businesses or incomes might be impacted by the coronavirus. It could also give a chance to shorten the debt. It could give someone who had a 30-year mortgage, a 15-year mortgage, and might be at the same rate or might be at a little bit more, and it could save some interest. This could also be a chance to consider business debt and what does that look like? Is there a refi opportunity there? We'd be happy to run through that. It's really on a case-by-case basis. And what is the plan for you? If we're selling a house in a couple of years, it doesn't make sense to refi our mortgage. And then finally, with some Roth conversions, it very well could make sense to take dollars that have never been taxed, dollars that are in an IRA. If 3 months ago we had a $100,000 IRA and then today it is worth $80,000, it could very well make sense to take some of the stocks or equities that are in that IRA and convert them over into a Roth. You know, if these stocks have depreciated greatly, if the stock funds have depreciated greatly, then we could put them in a Roth IRA, lock in the taxes. If we're at a favorable tax rate, lock in those taxes, and then when they grow in the future, none of that growth will be taxed. Again, that is very dependent on an individual's tax return and very much dependent on some of our expectations within a plan. So we want to take that very seriously, but we're more than happy to run through that. It could make sense for a lot of folks. On the housekeeping front, so it is really quiet in here. We are not doing meetings in person, either in the office or out of the office. We're trying to limit our contact and flatten that curve. Jonathan and Ann are posted up at their house working from home. Stephen and I are working here at the office and trying to limit even our contact. We're all available by phone, by email. We can send you a link to do video conference where we can show you ourselves and share our screen with you if we need to run through a financial plan or need to run through your investment portfolio. These are extraordinary times here, so we're available in the evenings. On the weekends, we'll send you a link for scheduling a time with any of us, and there's no question that we would love answering. It is an honor to walk you through your financial lives together, and we want to be available. And if there's a burden to you in this that has to do with dollars, or if there's anything that we can help out in this, we want to be a lifter of burdens in this. And so we will be on the other side of this, and we're thankful to get to walk through it with you. Thanks. Bye.